Welcome back. Let's quickly go back to the Asian screens and see how the picture is over there. Markets are actually quite negative. One has to concur with that. Look at that. Taiwan's down quite a bit. Hang Seng is down. Japan's down 2%. So the whole fear on what's coming 2nd April, given the trailer that we've seen with the auto tariffs, that's definitely weighing on markets' mind. A lot of these countries and economies are exporting countries, obviously. So we'll watch out for that. Let's see if India can be an outlier. Yesterday, of course, we were bucking the trend. Let's see if that repeats. We do have, I think, Siddhartha Khemka now joining in to take a couple of questions on the fundamentals. Siddhartha, great to have you on. I want to start with the defense names because true to form, Q4 has been good. It's been orders after orders. Yesterday, it was the turn of Force Motors and Mahindra. They'll be supplying some vehicles for the army. So tell us, would you still play the defense theme? And if yes, then through which stocks?
Yeah, good morning. So I think overall, we continue to remain positive on the defense space, mainly driven by the continued order inflows and the focus of not only Indian government, but now we are seeing a lot of shift globally towards increasing defense spend. So Europe is now increasing defense spends. A lot of other countries would be doing that, and Indian defense companies are benefiting from the India's government's increased defense expenditure, as well as there is a huge export potential because we are setting up a lot of facilities, we are tying up, there is a technology transfer that is happening, and to meet its year-end targets, the government is giving out orders before the 31st March deadline. So that is also giving improved visibility. Post the correction, some of the valuations have become comfortable. So we like some of the market leaders in the respective space. For example, in the electronics space, Bharat Electronics consistently is getting orders. Valuations around 30-35 times looks attractive. Earnings visibility of 20% plus, that's also pretty strong. In aviation, we like HAL, and in the shipyard as well as the Navy, you can say the defense shipyards, Mazagon Dock, which is the market leader, it is developing some of the world-class submarines. So I think these three companies would be the best suited to play the Indian defense space.
Okay, all right. Hi, Sid. Good morning and good to see you in. What about the auto companies? Yesterday, quite a few of them were down, Tata Motors in particular. And now this is uncertainty with regard to tariffs, but some of them could stand out. What's your view on them?
Good morning, Nigel. Good to see you. I think if you look at the overall auto space from a domestic standpoint, I think tractors is the one segment which is consistently reporting strong numbers. So we are positive on M&M. It's largely a domestic theme, and this global tariffs is not impacting them. So I think, again, insulated from this global volatility, consistently the newer EV models, as well as the on the passenger vehicle side also, M&M is consistently doing very well. I think with the strong tractor volumes, as well as strong demand for its newer launched vehicles, that would continue to do well. Tata Motors is the biggest, which will get impacted. About 20-22% of its JLR business comes from US, which is out of Europe. So I think sentimentally that would be a weak point. We need to see how the company is able to pass on the price hikes. Is there any impact on margins? So a lot of ifs and buts there. Some of the auto anchors also, which are exporting out of India. The only thing is that the supply chain will not shift overnight. It will take a long time for US to set up alternates or set up manufacturing base within the country to avoid that. So I think there will be some give and take in terms of margins, in terms of growth, and to that extent, it is better to, at least in the near term, visibility is better for some of the domestic players. Maruti, which is a strong player in the PV segment in India, I think M&M and Maruti, that would be the preferred players in the auto space.
Right. Got that. Siddharth, so just to pick up on a few names from yesterday, we'll talk about BSE as well later, but Bajaj Housing, Aadhar Housing, these were large movers. Yes, I'm not sure if there's any news flow. I don't think there was any particular news flow per se, but these are both names, recent listings, and both did very well. And the other one was BEML, ended 15% higher. So just a quick view. How's these two housing finance companies, if you have a view, and then BEML, go on.
So yeah, I think Prashant, the RBI improving liquidity in this calendar year, that is a big positive for NBFCs, the OMOs, the interest rate cut, and more importantly, the loosening of regulatory, you can say initially the risk weightages, and now again the weightages increasing in the PS. The priority sector lending. I think those are definitely a big positive for the entire NBFC space. However, if you look at the housing finance, I think the real estate space is witnessing a little bit slowdown, and it will take some more time for the mass or the mid real estate segment to start picking up once there is a meaningful cut in the interest rates. What we are positive on within the NBFCs, we believe the consumer financing or the consumer lending companies will see a sharper recovery. Some of the vehicle finance companies that could see recovery. So we like a Bajaj Finance and a Shriram Finance within the NBFC space. BEML, unfortunately, we don't have coverage. But as I said, again, capital goods companies are now witnessing an increased inflow of orders. And the entire last financial year, we saw a slowdown in terms of order inflows, which is now picking up, and hence sentiments are again improving towards the capital goods space.
All right, and yesterday on BEML, there was a large buy by a Motilal Oswal fund as well, which could have caused that stock to move up, besides an order win. And on Aadhar, there was a DAM capital note that's suggesting that, in fact, things are looking up for them. We'll try to get the management the next couple of days, so a couple of reasons why those stocks were up. But Sid, what about BSE? There was that big fear. NSE is going ahead and changing their expiry day, and they could pull some market share back from BSE. Now the regulator has stepped in. They have put out a consultation paper, and NSE has been forced to actually pause in its tracks. So because of that, BSE could be a winner. And also we have the bonus issue meeting over the weekend. Yesterday the stock was up 4%. How do you approach it? Keep in mind that BSE is a stock that's corrected a great deal from the recent peak. Please go ahead.
Yeah, Nigel, I think this is a welcome step. I think the regulatory step in was much required because this musical chair could not last longer. I think NSE shifting from a well-established norm of a Thursday expiry to Monday definitely was, you can say, a kind of a game stopper because Monday, you will not have the 2 days to play the expiry, going to the expiry, plus a lot of derivative algos, systems, processes have been built over the years with the Nifty expiry always being on Thursday. And that changing would have led to a lot of market participants being disappointed. I think that's a welcome step. Definitely a big positive step for BSE because they will get clear 2 days, Monday and Tuesday, for their expiry. And the entire theme that BSE would gain market share, there will be a gain in the derivatives market share after what the regulators did was reduced the weekly expiry to each exchange, one per exchange. I think that was again a big positive move for BSE. That news, along with the bonus, I think bonus will be discussed in that upcoming board meeting. BSE is said to keep their market share and improve. That's the view out there. I think that will be a big positive for BSE. We continue to remain positive on the entire capital market theme. And I think with the market improving, volumes have also improved both in the NSE as well as BSE. So keep a positive view on BSE.
All right. No, absolutely. We'll know 15 minutes or so. Stock should be higher. And, it'll be an interesting day for the exchange. 46.84, actually interesting day for the stock. We have Siddhartha Khemka, of course, still with us to run us through what he's making of things. So just to kind of sort of go back to some of the other names, right, which saw a decent size moves. Actually, it was a pretty broad-based session in terms of what went up on volumes, right? RHI Magnesia was the number one volume-led gainer, by the way, in trade yesterday. We discussed the housing finance companies. We discussed BEML. But AG's logistics was a 16-17% mover. I mean, just momentum. And some of this tends to spill on sometimes into the next day. Welspun Corp was a big mover, 6-7% yesterday. KEC, Action Construction, Thermax, all from that sort of capital goods, industrials, manufacturing, allied kind of spaces. Siddhartha, any thoughts on any of these names or anything you like in this area?
Yeah, so Prashant, I think as we were discussing towards the end of the year, we are seeing increased ordering activity that is building up momentum. Capital goods stocks corrected even before we saw the market correction, and that was because of A, valuation concern, and B, the entire capex theme taking a backseat. And now with the growth coming back, I think, and valuation being attractive, that's one space where we are seeing sector rotation coming back, and a lot of companies looks interesting. Obviously, some of the larger ones, for example, the L&T, Siemens, ABB, these are our preferred picks within the capital goods space. What also looks interesting is a small company named Kirloskar Oil Engines, where we are seeing a lot of, so the stock price had corrected, but I think demand is pretty strong. The transition to the new CPCB norms and so the power genset demand is improving. So that's one space where we believe companies like Kirloskar Oil could continue to report strong earnings growth of 20% plus, and valuations at about 18-20 times looks pretty attractive. So that's one stock where one can continue to look for within the mid and small cap space in capital goods. So we have a buy rating and a target price of 11.50 on Kirloskar Oil.
All right. Sid, thank you very much. Good speaking with you. Appreciate your time here on CNBC TV18. So Kirloskar Oil is the pick there.